Let's talk about HEG. The stock has seen a fairly decent move over the last 1 week, 21% higher on HEG over the last 1 week. The last 1 month, the stock is up about 23-24%. Numbers have been fairly okay, but there is an element of forex involved which has bumped up the profitability as far as fourth quarter is concerned. We have the management joining us. Manvinder Ajmani, Head Corporate Strategy at HEG, joins us on a phone line. Manvinder, great having you with us. Can you talk about the performance, particularly the bump that we have seen in the forex gain? If you exclude that, numbers don't look that exciting.
Yeah, we had a marginal forex gain, which is due to the movement of foreign currency which on our working capital borrowings. But primarily we have given a robust performance this quarter, which has translated into a quarterly utilization, capacity utilization of close to about 85%, and the revenues being at 443 crores, and the margins have also improved and brought back the overall margins to the range of 19% for the year, and we expect to carry the good show next year.
Okay, but if I assume this to be a one-off case, and if we exclude this from the earnings, then do you think the rest of the year perhaps could be a flattish kind of a year?
There is a little bit of softening of the graphite electrode prices. However, similar softening of prices is seen in our principal raw material, needle coke. So overall, while the revenues may not grow, we expect to maintain capacity utilization close to 75%, as we have done in the year that has just concluded, and we also expect to maintain the margins.
In a weak pricing environment, then how would you look at the margin picture for graphite electrodes? Your press release says that pricing is going to be weak. How would margins pan out in that case?
See, at this point in time, the visibility for H1 is fairly good for us. And overall, we expect that we will end the year with close to similar capacity utilization of approximately 75% for next year as well. Whatever is the softening on the graphite electrode prices side, we expect it to be made up by the softening of the prices in our principal raw material, needle coke. So that is how we expect the margins to be broadly maintained.
And I'm assuming needle coke also follows the same trajectory?
Yes, we expect that these, our expectation is that these price increases, as these price declines, would offset each other broadly.
So based on whatever you have said till now, can we assume that FY14 is going to be a rather normal year for you, exceptional gains? Perhaps if you exclude those, perhaps revenue growth and profit growth would be more or less stable?
The year ahead is expected to be challenging because the first calendar quarter has, excluding China, shown a negative growth in the overall steel segment. The figures for electric arc furnace route are not separately available, which is our principal customer segment. However, we are of the view that we will, given our track record of being of achieving better than industry utilization, we will continue to do so. Although the in relative terms, the H1 volumes may be marginally lower than the H2 volumes.
Okay, let's talk about the forex element here. What is the total forex exposure for you as of now?
See, now going forward, the forward movements, because our forex exposure both on receivables and payable side is now more or less commensurate with each other. So given that scenario, our overall net exposure is negligible. That is, exports and imports is broadly on the similar lines. So we don't expect extraordinary forex movements in the coming year.
Okay, power business has grown quite substantially in the fourth quarter. Which all segments contributed in this gain, and have you actually seen some bit of pickup as far as generation capacity is concerned?
There are two elements to the power division performance. In the thermal division, there are two captive thermal plants of 64 megawatt. They have benefited from very good availability of linkage coal, which was nearly 50% more than the previous year. So this has given boost to our thermal power division's profits. On the hydropower side, the generation of units courtesy good monsoon has been about 20-25% more than the previous year. So obviously, while the hydropower business will still be dependent on the good monsoon and the rain in the catchment area, the thermal power division continues to benefit from good availability of linkage coal, which is continuing in the current financial year as well. We have also started to get renewable energy certificates for our hydropower generation, and as the market for the renewable energy certifications picks up and more utility companies are compelled to buy RECs in respect of the thermal power generation, we should definitely benefit from that.
Okay, final question. Can you talk about the balance sheet, in particular the debt that you have, debt to equity as well as the cash on books?
The current net debt is about 1380 crores. About 540 is term debt and about 840 is net debt, net working capital debt. And our overall debt EBITDA is close to about 1.6.
Okay, Manvinder, thank you so much for giving us a quick lowdown of the quarterly performance and the outlook ahead. Let's move on. Let's talk about the radio space. Recently,